This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. This Earnings Preview is for the week of October the 27th through the 31st, which is Halloween, already here, with Charles Rotblatt, our senior market analyst at Zacks.com, with me to talk about the Earnings Preview for this current week.
And nothing spooky in there.
Well, listen, the markets are spooky enough, let me tell you. And you note that even in this piece. But, you know, with so many factors powering the stock market these days, this quarter's earnings seems to me to be like an afterthought. How about you?
Well, not exactly. I think there has been some reaction, and specifically I think people are looking where there have been warnings, where there have been warnings in terms of guidance, where there actually has been earnings misses, where there's been either flat or declining earnings. So I do think people are paying attention. They're not paying attention to what's been good. They're very much focusing on what's been bad. So there's a lot of fear priced in. But I think certainly there's a lot of concern right now about fourth quarter earnings and what the earnings picture is going to look like for 2009. And they are looking at what these companies are saying. We have had a couple possibly canaries in the coal mine, hard to say. Companies like Lockheed Martin, where they actually had to reduce their guidance because of a pension expense. Simply put, because the markets had dropped down, the pensions suddenly became, relatively speaking, underfunded. Not horribly, not underfunded to the extent that an employee wouldn't get his benefits, but below where they should be according to their plans. We also saw Kimberly-Clark actually talk about the dollar strengthening and that possibly impacting earnings in the fourth quarter. So I do think people are paying attention. There's some trends that are definitely catching some eyes, whether it's just limited to a small number of companies or several companies we don't know yet. But,
I mean, you have to admit, investors already know that corporate earnings, corporate America, is going to need a pretty good jolt from the defibrillator to come back from this heart attack. So earnings are probably priced into stocks already, aren't they, at this point?
I think they're more than just priced in. I think there's a lot of hyperbole going on about what's going on about the market itself. I think a lot of people are saying worst case scenario. And reality is when you look at what the Dow is trading at, when you look at what the S&P 500 is trading at, they're really trading at about 11 times earnings. So I think a lot of this downside has actually been priced into the market. Nearly every company in the Dow is trading below 3 times book value. I think the average book value for the Dow on a weighted average for the entire Dow is like 2.8. So I think a lot of people have actually priced in the bad news. So we see some of this bad news coming out there. It's more just fear, and it's really what we're seeing right now are a lot of buyers just sitting on the sidelines. And one of the things I do point out in this week's piece is that if you really look at what the markets have done since the intraday lows of October 10th, we've been in a trading range, including Friday today, October 24th, when the Dow has dropped pretty substantially. I hate to give a point value because as soon as I say
it changes. Right.
It'll be 50 or 100 points off within 5 minutes, but we really have been in a trading range since we hit that October 10th low. Obviously, a lot of people are focusing in on the year-to-date returns on these large intraday swings we're seeing from day to day, but the markets are at least temporarily moving towards some type of stabilization. Whether that holds, we'll have to see what happens.
How big of a contributor do you think poor earnings are to the undervalued state of the market right now?
Well, I think a lot of the undervalued state of the market actually is the fear that earnings weren't going to be good. So as I said, I do think it's priced in. And obviously when we look at 2009, it's very questionable. First quarter will probably see negative GDP growth, but as we go into second, third, and fourth quarter, I think it's anybody's guess as to what the economy is going to be. And I think when you look at both the bullish side and the pessimistic side, I think you have to take those estimates, those forecasts with a grain of salt, because the reality is we don't know how long it's going to take for everything to play out. We have a lot of stimulus coming in, not only from the Fed. Congress is talking about different additional actions. Looking at some more Fed cuts, and I talk about we do have a Fed meeting on Tuesday and Wednesday. Yep. When you actually look at the Cleveland Fed, they have a chart showing the probabilities of a rate cut. Numbers are really all over the place. The most likely scenario as of Thursday evening looked like a 50 basis point cut, but 75 basis point cuts within the realm of possibility, so is a 25 basis point cut.
Pretty secure, though, that we are going under 1%.
Well, I think not necessarily under, but definitely towards it. As I said, I think the extent of the rate cut we'll see on Wednesday, it's a guessing game.
A lot of people on the street right now feel that if earnings are going to have any impact for this third quarter on what's going on, it's going to have to come from companies that are out with numbers that beat expectations. You agree?
Yeah, I think so. And I think but it's also going to take a really confidence on the part of the investors, both professionally and individuals, really take a look at things and saying, you know what, I think markets have actually priced in enough downside risk that I'm willing to step up. We haven't gotten to that point yet. As I said, we are starting to stabilize. So I think really right now what we're seeing is more fear than actual trading on fundamentals. And there's a lot of fear about what could happen. We especially saw that overnight in Europe and Japan, rather than people trying to look at the fundamentals. And it's psychological. The credit crunch is psychological. Granted, there are real problems with the economy. There's real problems with earnings. We could actually see a year-over-year decline in earnings next year. But I think it's important for everyone to take a step back and realize that when you look at the extent of the selling and what's really going on in the economy, there is a disconnect. And really, people are pricing in events far worse than the current economic data suggests. And if you extrapolate it out and assume things are going to get worse, we're really having to look at things getting substantially worse to really justify a huge further drop to the downside from where we're at right now.
All right. Well, with earnings hitting full stride this current week, you say that energy is going to be the big focus.
It will be. We have 54 energy companies reporting next week. Oil has dropped somewhere in the low 60s right now, high 60s. I haven't actually seen where it's trending at this afternoon. OPEC's moving to cut production. Third quarter earnings for the oil companies should be kind of mixed, solely because we did see oil prices drop throughout the quarter. I don't think it'll have the impact that it normally would have, solely because everyone knows that oil has dropped and some of the estimates have actually been reined in. But it is one of the primary sectors we'll see numbers from, including Dow Components, Exxon, and Chevron.
All right. Well, we'll have to wait and see how it plays out. Charles Roplet, Senior Market Analyst at Zacks.com. You know, you can always view a calendar of the companies expected to report in the current week in Charles' Earnings Preview, the text version. And all you need to do to access that is go to Zacks.com and scroll down the page until you get to that picture of Charles' smiling face with the Earnings Preview headline right next to it. Click on it. It'll take you right there. With Charles, I'm Terry Ruffalo.